And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow. Hello, everyone. Welcome to another Wealth Within update. I am Jim Beach of School for Startups Radio, and as always, I'm excited to welcome Dale Gillham of Wealth Within. Find him at wealthwithin.us. Dale, last week I said I felt like a yo-yo. This week I feel like my yo-yo has been shot by a shotgun.
Yeah, it is one of those weeks, wasn't it? I was saying to somebody just before, I often say a week can be a long time in the stock market, but I think last week was a whole year for us. It was a long week, and I think the last couple of weeks have been very, very long, because it was only a month or 8 weeks ago we had massive bushfires here in Australia, and we're talking about a whole range of different issues. And obviously in January we were talking about the US-China trade wars and all sorts of other things only 6 to 8 weeks ago, but very different nowadays, isn't it?
Well, I was out today. Our city is not under lockdown yet. All of the restaurants and bars are closed, though they are still serving takeout. You can drive up and get food. But I went to Home Depot this morning, Dale. My wife gave me a list of honeydew things. And I'll tell you what, Home Depot was packed this morning. No one close to each other, but it was busy. I drove home. I saw people all over doing yard work. It seems like America has quit and gone home and decided to do yard work.
I think it's the same here. We're getting a lot of people buying chickens for hens to lay eggs. We're getting people are buying home gardens to grow their own vegetables. I went to our version of Home Depot and I bought some more gear for our studio, not necessarily for home, but there were a lot of people there too. And I think perfect time to be doing all those little jobs that your wife asks you to do, but you never quite get around to.
All right, let's go macro first before we go stock market. What do you think is going to happen? Are we all going to die? Are we going to live through this? Does the market live? Does the economy go back to caveman times? What is your macro outlook for the entire world?
Oh, look, thanks for the pressure, matey. That's really nice. It's a big question, isn't it? And I think what we're seeing now is over history we've had what you would call game-changing things happen. For example, probably one that comes to my mind is when Henry Ford invented the production line. So that changed the game right across the board for manufacturing. Obviously, Apple came out with iPhones, and that was a big game changer there. And so there's things that happen through history that causes us to rethink the way we do things. And I think there's going to be some big game changers now in terms of how we work and how we deal with things like this, because the current pandemic is a coronavirus. It's a form of a flu virus. It's not going to be the last virus we're going to get, and by accounts, this is the third one in this century so far. We obviously had SARS early 2000s, then we had the world flu pandemic, which I think was about 2009, 2010 from memory, in that sort of range. So it looks like 6 to 8 years we're getting another pandemic of some sort. So I know a lot of companies will be rethinking how they do business. And what types of businesses are important. So I think we're going to see a huge shift over the next 6 to 12 months. That's my take.
Well, businesses that I would never expect to be in trouble are, right? So I would expect Boeing to be hurt. I would expect the gaming stocks, the hotel stocks, things like that. Boeing looks like it's going to be nationalized here. I expect Trump to just buy Boeing tomorrow, for the 12 cents that it's still worth. But then we have companies, Disney, reporting that it needs a bailout. When Disney needs a bailout, the next thing we hear is that Google is going to go bankrupt. It is the scariest thing that I can imagine. And I think that a huge part of it is the speed, with all of the other big changes. We've had some time to recover emotionally. So I don't know. I just pray for all of us. All right. So let's go back to the easy stuff, the stock market. How does this fit in with other historic massive drops?
Well, we're still sitting in the same ball game as other massive drops. We haven't gone as far as the 87 crash. We haven't gone as far as the GFC crash or even the 1929 crash. But there is a whole lot of issues in terms
let me interrupt you there. I want to make sure that, because I think this is a huge point. You're saying we have not gone to we've not had the same amount of losses we did in 87 or just 10 years ago, right? So I don't think that the world feels like that. I think we feel like we've had 10 times the biggest loss ever. Okay, that makes me really a little bit reassured. We haven't gotten as bad as it's been during my lifetime, twice during my lifetime.
We're only back down to 2016 levels, so that's when Trump got into power. Basically, that's where we are. So, but most people are asking me to quote them, how far can it go? And I'm getting, well, when's it going to stop? And this is where nobody actually knows the answer. And I find a lot of people go, well, Dale, you said it was going to go to this level, and it went through that. And when I quote levels, it's always about their high probability points of where it might find support or resistance if it's rising, and also points in time where I say, well, look, I think it's going to rise up for the next 2 weeks. They're just more high probability, but how low can the Dow go? Well, it's got good support around 18,019 points. It's got very good support around 18,019 points, but then if it breaks through that, then it's 15,293 points. That's the next level. But when we look at 1932, the Dow fell 50% in price over 61 days, okay, and then it bounced. It rose 52% over the next 151 days. So the next 6 months, it rose 52% after falling 50. And that's really things you need to look at here about what the market is doing, and do compare it to times before. Now, what we also saw is, we saw the Dow fall 86% over 822 days into the eventual low in 1932. So after it rose 50%, it fell away again, and it was eventually down nearly 90% into 1932. Now, moving forward to 1987, which we mentioned briefly, is the Dow fell for 61 days and 41% in price, and after that it rose 86% over the next 33 months. So you're getting a beautiful big bounce out of that. During the GFC, the Dow fell over 17 months and 54% in price. And after that, it rose 74% in the following 13 months. So another big bounce after that. Now, a 50% fall in the Dow now would see it to trade at 14,784 points, which is about 22% from where we currently are on the Dow. And the current fall's just been 29 days. Now, if we compare this to 1929, there's another 22% in the fall if we compared it to that, and roughly 30 more days before we see the Dow find support if we compare those two events, because a lot of economists are comparing the current market to 1929, 1932, where the US went into a depression. I don't think we're going to go into a depression. I think we're going to see a lot of changes in how business is done in the marketplace, but I think we're still nowhere near where we were in 32 and 1987. I think we might see a bounce, and the bounce will be good.
Yeah, all of the people are talking recession, depression. I think that we're going to get a quarter, obviously, and hopefully we'll get all of the GDP, destruction in one quarter. And then the next quarter, by definition, would be a bounce back. If we dropped 20%, the next quarter would have to grow over that, simply because I still need that computer we've been talking about for 2 or 3 weeks. And I'm not going to buy it until I feel safe that I won't need that money to buy ammunition.
Yeah, and you're right. I mean, two things at the moment is we're not with the... Before, what a lot of people don't understand is there's not a lot of computers to buy right now, and it's not because of the coronavirus, right? prior to the coronavirus being a world pandemic, you couldn't get SSD drives for computers. They were very, very hard to get. I know I tried to buy some 4 months ago, and it took 8 weeks to get them. There was very few around. CPUs were in hard supply and RAM. So all of this was happening prior to coronavirus. There's a lot of shortages on computer parts. But once China is starting to get back to work right now, and so we will see that. But again, you're right. There's a huge run in Australia that I know of on computers, screens, headsets for telephone calls. You know, people are Skyping more, Zooming more, all of those things. They're working from home. I mean, our staff, we've already been set up for the last 2-3 years for all of our staff to work from home at any time. And we allow them to do that, and they come into the office. To us, nothing's going to change, but there's businesses that are booming right now because of it, whether they sell chickens or whether they're home delivery services or whether it's, you know, Starbucks will still keep making coffee for people and McDonald's are still going to keep making hamburgers. They're just not going to be as busy in their restaurants. So it's just looking, this is the time for entrepreneurs to come up with great ideas and to profit from it. So, you know, as they say with, if you always got lemonade, lemons make lemonade. And now's the time to make some lemonade.
All right. One thing that we have not talked about yet is the recovery of some of the Asian markets, and in particular the Chinese market. How is China doing compared to the American markets right now? And what do you see behind that? Some people are calling it a little suspicious.
Oh, look, I sort of called it a few weeks back thinking the market shouldn't be falling this hard, so why is it now? I'm not sure what it was, but the Chinese markets are nowhere near feeling the effect of the coronaviruses or as much as any other world markets. And, you know, as a saying, I think we were chatting last week, I said, geez, it was only a few weeks ago they were talking about the phase 1 deal between the US and China in the China-US trade war, and that would have had enormous benefit to the US from that point. But it's, you know, the Dow's gone into free fall pretty much not too much after the deal was signed. Now, currently the Dow's down 32.81%. But when you compare that to the Shanghai Composite, that's only fallen 9.98%. So a third. Why is that? When China shut down all its manufacturing, why is it doing that? The Hang Seng, that's fallen 19.91%, so 2/3 of what the Dow's fallen. And the Hang Seng, these are two big markets in China. Other Asian markets are also doing a little bit better. The Straits Times Index in Singapore has fallen 25%. And Singapore is really coping with this coronavirus very, very well. I mean, obviously Singapore is a financial hub of Asia. It's not a manufacturing hub, so it's not being affected that way. And it's also very much a tourist spot. So that's what's probably being affected a little bit by there. But Japan's Topic 1000 index, that's down as well, around about the same as Singapore. And the Nikkei is down around 30%, so it's around about the same as the Dow. But, you know, I was saying to somebody, sometimes wars are fought with guns, sometimes it's economical, but are we seeing a different kind of war now? Because I know China has come out and said it wants to be the dominant power around the world. It wants to take the US power. And they've come out and said that. Maybe, you know, conspiracy theorists are out there saying, well, that could be happening now. But I know China's been using this drug called hydrochloroquine to effectively pretty much eradicate coronavirus, and that's a malaria drug. And I know we've been doing trials on that in Australia, and I think the US has as well. I think Trump's come out and said that as well. But they're finding ways to cure the coronavirus right now, and I'm sure these ones will be weeks, not years or months to come out. We're doing some tests, I think, in the next few weeks in Australia on that drug with another one that's for AIDS. So I think once we cure up and make sure people are safe and say, well, if you do get it, we can fix you, everything will slowly get back to work again. So, yeah, so hopefully the sooner the better.
I certainly pray for that. So let's wrap it up, Dale. What's going to happen in the market this week? Sideways, down some more? Are we going to bubble up? Or are we going to yo-yo again and do 2,000 up, 2,000 down, 2,000 up again?
I think I better consult my crystal ball. It's one of those times where, you know, I can say, look, this is what I think, but it may not necessarily happen. And I often find when I teach traders how to trade, I say you've got to have two views, you know, one if it does this, one if it does that. Right now, we're still going to have volatility on the market, but I think as I said, I'm still expecting it to find some support and bounce a bit. Generally, with humans, we overdo things like buying toilet paper. So it wouldn't surprise me if the Dow was up this week. But again, it wouldn't surprise me if it was up last week, but it wasn't. So I am expecting a low sometime in the next few weeks for it to start to bounce. But last week gave us some signs that it's not really going to fall that hard anymore. It's slowing down. The falls are slowing. And that's saying that that the market is saying it's getting to be more reasonably priced based on what they're taking in and the more information that we get. So right now, sit on your hands, as Mr. Buffett says, and go and mow the lawn and do the painting and fix all the things that your wife asked you to do.
Well, I will tell you that there is a new thing in America now. We're putting up Christmas lights now because of the corona. We're calling them corona lights. And several people on my street have put up lights. We put up a 20-foot tall roll of toilet paper on the front of our house. So we have a huge toilet paper Christmas light thing on the front of our house. I'll send you a copy of it, and you can insert it right now if you want to. But that's how low we have gone here in Atlanta, Dale. I'm embarrassed to say.
That's fair enough.
All right, too. Dale Gillham, wealthwithin.us. He's calling for a 6,000-point jump on Monday. No. Dale, Jack, everyone there, stay safe and pray for the world. Godspeed to all of us. And I hope we all do well and hope the markets bounce back.
Same to you, Jim. Thanks, buddy.
We'll be back next week. Take care, everyone.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, as Jim said, it was an interesting week again last week, and his yo-yo's now broken, and again the market fell away. But I keep reiterating, now's not the time to get in and bottom pick and try and pick all sorts of stocks about what's going to bounce and when it's going to bounce. Right now is really the time to sit back and wait. Now, because the Dow could go lower than what it currently is, it could bounce this week, and the bounce could start happening this week, and we could see a nice big move up of 20, 30 or more % over the coming few months. But it could go further, and unless you understand that, you are taking very, very high risk with your money trying to jump in too early. Now, people go, well, geez, if I jump in a little bit early and it falls away another 5 or 10%, that's not too bad, but we don't know. And as I said in my chat with Jim, if it goes down to 1929 levels, in that big move down there, there's another 22% to go, and in the 1929 it did keep going down 90%. Down into 1932. So let's go and have a look at the Dow right now. So on the screen you can see my chart of the Dow Jones. You can see here the previous all-time high up there at 29,000. I'll put my glasses on so I can read it properly. 29,000. Now, the levels that I was talking to Jim is, I was saying here's some significant support there at 18,019. That's where it's some significant support there, because it's very close to this other significant support level, but that's not too far. So it wouldn't surprise me if we found some support right now, and you can see there that's about 5.8%. Whether we get a little bit of a push down there and find some support and then start to move up. But again, like I was saying to Jim, don't just keep that figure in your mind, because it could fall further. We might see 1 week up, 2 weeks up, and then it turns over and falls away to my next level. Now, my next level, you can see down here, this one's quite strong support there, that 14,784 points. That's actually the strongest level that the Dow has, the strongest support level. Is it possible to break? Absolutely. If it breaks that, it's going to go down to 12,000, around that sort of 11 to 12,000 point level. But I think it's going to pull up around there. And when you look at probabilities, it's nowhere near 100%. It might be, there's probably a 60, maybe a 70% chance it'll find some support there. And there's a much higher chance of it finding support there, because 50% is where the Dow hit back in 87. It also hit there back in 29. So those massive crashes, obviously the 87 and the 1929 crash were quite fast. Same as this one. This one's faster again. So that level there at 14,784 is quite strong. And again, if I put my little pointer on there, you can see here it is around about that 22-23%. I haven't got it on the right figure yet, but you still need prepared for it to go down to that level. But what I want to do now is actually go in and look at some of the stocks in the top 100 stocks on the Dow Jones. So and have a really bit of a look at them to show you what you should be looking at yourself. Now, if I just bring them up, there we go. So here's the list of the top 100 stocks by market capitalization on the Dow. Now, I've set this at 1 year, so this is from 1 January 2020 to today. And you can see here that Gilead Sciences is up 12.74%. Now, if I click on the chart, you can actually see the chart through here, and you can see how it's up for this year. Now, this is a weekly chart, so here obviously January is right down here, so it is up for the year. It is looking all right. It had been hit a little bit by this virus, the coronavirus, and this meltdown on the marketplace, but hey, it's looking all right. So this is probably a better place to start putting your money. Netflix is doing okay. It's up 2.86%. Now, obviously, if everybody's home, they're going to be watching Netflix a hell of a lot more, and other streaming services. So it was interesting to see that Disney's going to be in trouble. Obviously, Disney makes a lot of content, and obviously Netflix do as well, but that subscription streaming services, people would be more subscribing to them now than what they were before if they're spending more time at home. But Netflix does not look too bad. Amazon's shipping a lot of products now. If you can't shop in the stores, or you're afraid to shop in the stores, unlike Jim going to Home Depot with all the people, if you're afraid to get out and go into those stores, or you're in lockdown, then Amazon's going to be delivering, because delivery drivers will still keep working. And I think you're going to see a lot more home delivery happening, not only in food, but also in other products. And Amazon is primed to take advantage of that, not just in the US, but around the world. So you can see that it's holding up beautifully here. Costco, down only 1.19%. Again, people are buying bulk. Walmart's not doing too bad, so that's pretty good. Lilly Eli, obviously they're in those sanitary type products, and you're talking about your toilet papers, those sorts of things. People are wanting those basic essentials. Colgate Palmolive, again, only down 9.82%. Some of these stocks are looking really, really good. If you look at that one, that's a daily chart. Let me go back to a monthly, so you can see the bigger history. I don't have all the data on here at the moment, but it is looking good. So this is where you're going to be looking for some of those stocks. Service businesses, not necessarily manufacturing, not necessarily business that have a lot of facing people content, but they do provide services. Microsoft doing really, really well, and even Apple's not too far. But here's Google down here at 19.8% from that. Because it's actually doing quite well. I mean, Google's still going to have people, they're going to get businesses that can't normally get clients through the normal channels will be using Google. They'll probably be buying more ads to try and get people to buy off them offline rather than coming into their stores. There'll be a whole changing in the world, and that's what I was sort of saying to Jim. If we look at the other end, this is the top 100 stock. Jim mentioned Boeing. It's down 70%. Boeing is down huge if you look at that, and maybe Trump will come in and buy this and make it a state-owned airline. Now, if he does that, it will only be for a short period of time, I would suggest, till it stabilizes, because America does want to continue to manufacture airplanes, and this is just a short-term move. He may even come in and buy, one of the airlines or something like that as well, to keep America having its own airline and its own manufacturing. But is this a big bargain right now? No, it's not. And there's no bargains right now on the marketplace. Everything is, at this point in time, as I said with Jim, is to keep your hands on your knees and sit back and be a patient view and wait for the dust to settle, then come on in. But you've got Simon Property Group. Property, I think, is going to get hit, especially commercial property, I think is going to hit big time, because as businesses realize that they can have staff at home who are happy at home and lowering their costs, why would they be buying or signing new big leases on office buildings and be larger premises? I think we're going to see a lot more businesses consolidate premises and downsize premises over the next few years, because this is proving to them that you can work at home. As I was saying to Jim, we've been set up for this for 2-3 years. We've had staff working from home for 5 or 6 years. Man, it allows us to have a wider range of staff. Staff are happier, healthier, and we're still getting all the outputs that we need to get, and the results that we need from a business. So I think it really, really does work. So, but again, just have a look at what those good stocks are doing, and they're the ones that if you want to start buying and you do find you really want to get into it. If you look at some of these worst ones, you're looking at Citigroup. Some of those are the energy companies and the banks. So Citigroup, US Bank, we've got Wells Fargo there, you've got Morgan Stanley there in financials. There's Disney down 40%, American Express, JP Morgan, Goldman Sachs. So financial stocks are down at this point in time, but they could be paying better dividends now. So this will be also could be on the cards for when the stock market does bounce, that you might be able to get into that. But then again, sit on your hands right now, take a deep breath, go and do the work that your wife's asking you to do, or spend some time with your family and stay safe. But as always, I'm Dale Gillham, the Chief Analyst here at Wealth Within. If you've got any comments, please put them below on the email. If you want to ask some questions, or you've got stocks you want me to look at for you, please do that. So thank you for that. And remember, we do these every single week here, released every single Monday for the USO, give you my thoughts. And I'm going to be putting another couple of shows together, but watch out for those. I'll give you the details on those pretty soon, but I'll be doing another show very, very shortly to help people understand the market and what they could be doing with investing. But for now, goodbye, good luck, and good trading.